Mackenzie Johnston with Cattle News Central, bringing you your February 8th cattle industry headlines, brought to you by AgRisk Advisors. They provide risk management programs to livestock producers all across the West. Whether you are concerned about price or weather risk, AgRisk Advisors, they're here to help. With current day market fluctuations, there is nothing more important than locking in a price floor on your cattle. So if you'd like to learn more about an LRP, go ahead and reach out to an advisor today. Also sponsored by Lemke Cattle. They're going to be hosting their annual bull sale this Friday, February 11th at the ranch near Lawrence, Nebraska. These naturally thick, heavy muscled, complete Angus, Red Angus, and Balancer genetics are developed right, guaranteed, and built for profit with over half qualified as top dollar Angus sires, while also siring highly maternal, easy-keeping females that will keep you in the cow business. Go to lemkecattle.com, DD Auction, or check them out on Facebook for weekly updates and videos. And finally, American Beef Producer Magazine. They offer in-depth articles on a wide variety of topics within our industry. They feature award-winning photography and so much more within their publication. To check out their most recent edition, their February edition, go ahead and click on the American Beef Producer Magazine link above in the caption. That will take you over to their Facebook page where you can check out that most recent edition. American Beef Producer Magazine, guiding beef producers for over 25 years. The Oklahoma Farm Report has reported that CattleFax presented information and numbers down at NCBA's convention in Houston last week, claiming cattle prices and profitability trends for producers are pointed in the right direction, even with persistent challenges like labor shortages and lack of packing capacity due to the pandemic hanging on. Both of those issues, packing capacity and labor shortages, are expected to improve as we head into 2022. Expanded packing capacity coupled with strong global and domestic consumer beef demand suggests increased profitability across all segments, signaling a market that is healthier and more stable in the coming year. According to Kevin Good, Vice President of Industry Relations and Analysis at CattleFax, the U.S. beef cow herd has shrunk more than 700,000 head in the past year. In 2022, the beef cow herd will approach 30.1 million head. If our industry continues to be impacted by lack of profitability and drought, at least another 250,000 head of cows will be liquidated this year. During the seminar, Good forecasted the average 2022 fed steer price to be $140 per hundredweight, up $18 per hundredweight from 2021, and the range this year will be somewhere in between $130 to $150 per hundredweight. He also forecasted cull cows to range somewhere between $65 to $85 per hundredweight, with an average of $75 per hundredweight. And bred cows, he expects to land right around $1,850 per head, with a range from $1,700 to $2,000 per head. Tight global protein supplies are expected to fuel U.S. export growth, but they will also increase beef prices for end users and consumers in the coming years. CattleFax projects the USDA all-fresh beef retail price to average near $7.15 per pound this year, resulting in more margin in the system. So essentially, the packers will be able to make more money. Wholesale demand for beef will most likely slow up a bit due to an increase in price, but cutout values should stay right around $280 per hundredweight on average this year, said Good. According to meteorologist Matt Makins, La Nina remains firmly in control of the ocean atmosphere system, and that most likely will not change anytime soon, but come summertime, there is a chance that we could see some changes. Dryness is expected to continue across the southwest and south with warm temperatures. The northern plains and the Corn Belt are expected to have wetness the farther east that you go this spring, and drier conditions for this summer, and temperatures should be closer to normal versus what we saw back in 2021. Weather will continue to impact hay prices, with much of the central plains and the west battling some level of drought. As of December 1, on-farm hay stocks were down 6% nationally compared to the year before at 79 million tons. Current hay prices are forecasted to be right around $186 per ton, $10 higher than 2021 prices, thanks to tighter supplies and stronger demand. CattleFax CEO Randy Block closed the session with an overall positive outlook, expecting margins to improve as cattle supplies tighten and producers gain leverage back from packers and retailers. He also sees beef demand remaining strong with expected export growth and utilization and packing capacity improving over the next few years. Finally, Reuters reported that on Monday, Tyson Foods' shares climbed more than 11% to an all-time high after the meat giant reported that their first quarter profits nearly doubled thanks to sky-high U.S. meat prices. Just since the beginning of the year, shares are up 14% to reach a record $99.20. According to Chief Executive Donnie King, customer demand continues to outpace the company's ability to supply product. Of course, with the news of these first quarter record profits, Washington, D.C. will most likely ramp up their scrutiny of the U.S. packing capacity since the Biden administration has already criticized the sector for having a lack of competition. The average price for Tyson's beef surged 31.7% in the quarter ending January 1st, which that was their first quarter of their fiscal year, and that was compared to the same quarter last year. So an increase of 31.7%. Pretty incredible. Tyson's beef unit also saw margins jump 19.1% from 13.2% a year ago. Average prices for all of Tyson's products climbed 19.6% year over year in their first quarter. Furthermore, the meat giant's beef sales increased about 25% to $5 million compared to this time last year. This increase helped the company's sales increase 24% to $12.93 billion. Tyson claims that the company raised meat prices to offset higher costs for labor, transportation, and grains used to feed livestock. Tyson's cost of goods increased 18% in their first quarter. It's fair to say that Tyson is doing A-okay these days. That is all I have for you guys this morning. I hope everyone's week is rolling right along. I hope you guys are having beautiful weather wherever you are at. It is absolutely gorgeous here in central Nebraska. Way too warm for this time of year, but I cannot complain about it. Have yourself a terrific Tuesday. I'll catch you later.